Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Tuesday, February 8th, 2022. Markets ending the day slightly higher. In a normal market, we'd say, wow, almost up 1% on the S&P 500. In this market, it's kind of just a gentle little uptick day. And I know that sounds weird, but that's just the nature of the beast right now. The volatility in the market means that it's more likely to be a 2% move up or down versus just barely a 1% move. You can see the choppiness today. Early in the day, we were selling off just a little bit. Look at that beautiful bottoming tail right there, folks. And again, just an absolute classic bottoming tail right there. Bottoming tails, again, for those of you that don't know, are reversal signals. Again, it's a buy alert right there. And look at what the market did after that. Market's going right up to this pivot high here, and then pulling back, and then going up again, making a slightly higher high, pulling back and closing right underneath that level. The biggest thing that stand out for me on the charts, number one, is this level right here, which I do think we test. And believe it or not, I kind of even think we fill this gap. There's a big gap right here, and gap fill is around that 457 level. And considering we're at 451-ish, I think personally we see an upside move there. So we'll see if that plays out. Today, I didn't do a whole lot of trading. I added to my Facebook position. Again, Facebook to me is into major support. We'll flip over to the daily chart and kind of get into the nitty-gritty on that front. Here's your daily spiders chart. But let's start with Facebook right here because I think this is important here, folks. So again, bear with me as I get back that chart. And basically what you can see here is that Facebook is into a very good level. So pivot high right here. Cuts right through there, and there's a little bit of a pivot right there. And again, we've done a full retrace. In fact, this is the retrace to the pre-COVID levels. So the pre-COVID high right here, and then you saw the big COVID dip, and then the rally higher. So in general, you would expect a support level here. If we look and zoom into the candle today, you got a little bit of a doji. Dojis can often be reversal signals. They're not as powerful as bottoming tails, but they certainly do denote buyers stepping in, swooping in, especially if you look late in the day. If we flip over to the 10-minute chart here, you can see, look at this buying that came in at the end of the day here on Facebook. That definitely is something that I pay attention to. I was commenting to a couple traders today that it wouldn't shock me to see a buyback, a big buyback announced by Facebook, or just like Netflix. Remember what Netflix did? Netflix basically came out here, and what we heard is that a big hedge fund manager took a hold or took a position, and you could see what happened there. So Netflix was kind of chopping after the big, massive, basically decline of 25% here, and then a big hedge fund manager took a position and had a huge move from basically a close that day of 385 all the way up to, amazingly, almost $460. So I'm not necessarily saying that type of move is going to occur with Facebook, but you're getting to a point where there's going to be, at some point, a big hedge fund that decides to take a position. You're going to get to a point where a buyback will be announced. And again, it usually coincides with a level on the chart, and we certainly are at a level on the chart here. And again, you can see it right there. Now, eventually, is Facebook going to go a little bit lower? Yeah, I think so. And by the way, sorry about all those lines. That's from a different chart here. We'll erase that. But basically, what I'm seeing on the charts is that eventually you will see a move a little bit on the lower side here. I'm pricing in, you have this longer trend right here. So down the line, I think Facebook does go lower. But my guess is you get a bounce back to probably 250 or 260 prior to that next leg lower, which will take you down to this trend line on Facebook. Okay? All right, so again, interesting to see there. Let's flip back to the spiders. Here's your spiders long-term trend. We know the market, the S&P, was on steroids here. We've now broken below that. We got very close to a retrace. We'll see if we move up, fill the gap, maybe even touch that line. I would love that. It's pretty wild stuff, but if we could get a move back to this channel right here, it would be a classic full retrace to the scene of the crime, and you would see me loading up on things like SDS, which is a short ETF on the spiders 2 times, maybe SPXU, and same thing with the Nasdaq. I mean, if you got to retrace back to those levels, it would absolutely be a phenomenal area to kind of pick up positions in. And we can flip over to the NASDAQ, which had a decent day today. You can actually see here, you can connect the recent highs right there, which is kind of cool on the QQQ chart. But my guess is you're going sideways. I would wager that you probably at least fill the gap here before seeing further downside. And again, if we zoom out, you can see that here's your range. This is pre-COVID high to COVID low. And then look at how the market, again on steroids, stayed in the upper. See this dotted line right here, that midpoint? You stayed in that midpoint the whole way up. Then you broke down and you went to the low point. Now you're chopping here. So a move back to that midpoint would actually be very normal for the NASDAQ 100. All right. And again, I don't know if it's going to happen. Ultimately, you guys know I am bearish. I do think ultimately the markets will drop sharply to the downside and break out of this even lower end of the channel and actually come all the way to pre-COVID levels. But that doesn't mean it's going to happen in the very short term here. They still might have enough juice. Market may have enough buyers getting in, especially as the markets are settling down, coaxing in smaller investors and so forth to kind of drill this market up high enough to get back to those levels. All right. So again, we'll continue to monitor that and see how it all plays out. The Russell is one that I am still long via TNA, and it was a great move on the Russell today. Beautiful move up, 1.7% on the IWM. You guys know I've been talking about likely heading back to that level that I've talked about quite a bit, which is right around here, around 210. We're less than, basically $7.24 away at this point, which is still, multiple days of upside needed. But again, that's kind of what I'm eyeing here as your upside potential. Will I hold the TNA the whole way? That's a good question. If we go to the TNA here, let me bring up that chart. TNA, we are in the money pretty nicely. But yeah, in the very least, I think you see 65 plus on this, maybe even 68. And again, if it retraces up, maybe even 70 on it. Wouldn't shock me one bit. A couple of things that I liked seeing today. China stocks were extremely hot today. We even saw a name like Didi having a good day, up about 10%. Alibaba was up over 6% today. Baidu up about 5%. So you did see some good gains out of the Chinese names. Now the question is, can they back it up with further upside in the near term? And again, that'll be something I'm keeping a very, very close eye on as well. Another stock that I was happy to see moved up was SE. SE continues to grind higher. Again, our average, I think, is right around 147 and change. So that, again, continues to look really, really nice. And again, I will be continuing to monitor that as it gets up into resistance. I do have some resistance on this coming up around 167 to 168, this low here and right here. So again, I'll have to reevaluate at that point if I like it enough to continue to hold it from there on in, okay? Looking at a couple others, some disappointing price action on names like Square today. Square finally pierced the even number of 100 briefly, but closed back up. But again, that still hasn't bounced. What's kind of interesting about Square is that it's kind of a crypto play, and Bitcoin we know has had a monster move, but Square is still stuck at the lows. So, my guess is there's got to be some hedge funds that were over leveraged in names like Square, even PayPal. And again, if you look at PayPal performance today, kind of the same thing, right? PYPL. This thing right at the lows here. And, what that tells me is that, again, some hedge funds had oversized positions that they probably shouldn't have, and now they're having to kind of pay the piper in respect to unloading those, and it's keeping these stocks from bouncing. Now, the only positive thing about that is that once they're done, you should see a very quick snap back to kind of get back to equilibrium with what crypto prices are doing, what the market has done, and so forth on the chart. I even think that's happening to some extent with Facebook. I discussed it recently on Facebook, right, where not only did you need to hit the technical level, but also you have, you had probably pension funds that were way, they were kind of pricing in. My guess is they were pricing in daily moves on Facebook of like 2%, which is, kind of the average, I would guess, for Facebook prior to this 25% collapse. And so that the way funds work, these pension funds, they analyze risk and they say, okay, well, we can put X amount of percent in it. Well, when that risk balloons by a 25% drop, again, they don't have the choice to say, hey, I still want to buy more Facebook or I don't want to sell any. They have to come within those risk parameters again. So what it means is they have to basically say, all right, even if we think Facebook's a great buy here, based on our metrics, we have to sell X% of our position in Meta Platforms slash Facebook to get back in alignment. So again, you see a lot of this continued pressure. And one of the things, I mean, I'm not a technical guy, but one of the things I like on Facebook now is actually the valuation. Now, granted, they were talking about relatively minor growth, but if you go to the Facebook numbers, Facebook is slated to make almost $16 a share in the coming year, right? And what's amazing about that is it puts the PE ratio, very, very low. You're talking about a 15 or a 14 handle on the PE ratio. In fact, if I just type it in now, I can do it real quick. So let's just say they make $16 in 2023 coming up, and you have a $220 stock price, so divide it by $16. You're now at a 13.75 PE ratio. So in the scheme of Apple, in the scheme of Microsoft, even in the scheme of some of these other ones, the PE ratio is getting more and more attractive. Now, again, in a bear market, could it go sub 10? Yes, absolutely it could. But again, you're in the very early stages of a bear market, not at the end of a bear market where you would see it at sub 10. All right. So anyways, just a little tidbit there for you guys to kind of ponder. Let's take a look here at Bitcoin. Bitcoin pulling back, as I said it would. Gotta love charts, folks. And again, I keep coming to you guys every day with some cool stuff and predictions based on the charts. And you can see very clearly you have this trend line right here. And then look at the high yesterday in the overnight, right around 45,500, give or take. Again, I talked about a 45 to 46,000 high pivot as being the short-term high, and you've pulled back beautifully underneath that. It also meshes with this line here, which meets right there. You can see these lows here, and again, look at price going right there. Now, can Bitcoin break through this? Maybe it can, but according to the extension move here, it probably has to pull back first. The first big test is going to be around 41,850, give or take, which is right here. That's going to be your first big test for Bitcoin. And if it can hold that, then you might get another move up, maybe 52,000. If not, look out below. It's going to come down, retest this downsloping trend line, which is getting lower and lower day by day. All right, quickly flashing to gold. Obviously, I'm a huge long-term gold fan. Gold continues to grind up. Another little update today. Very small update, only about 0.25%, but I will take it because, again, the more this moves here, and sorry about that. Let me put up my real gold chart here with my lines. And here you can see, again, gold up about 0.3% there. And, again, just kind of climbing back. And remember, the more you hit this line, the weaker this line becomes. So at some point, I'm in the camp that you're going to see a bigger breakout. And just to rehash this, guys, I want to show you this again. So in fact, before we do that, let's go back to 2018. So I want you to remember this when I go to my next chart. 2018, what happened? Gold had this monstrous run for 2 years, topping out at 2007. So it went from $1,150, we'll call it, to about $2,075. So not quite 100%, but a pretty impressive move. Since then, it's pulled back slightly and gone sideways, all right? Now, we're going to go back to the same period in the 70s when this was basically starting. So when inflation was just starting in. And we're going to flip over to the daily chart, or the weekly chart, just to kind of see it easier here, because otherwise it takes, forever to find this. All right, so here's the 70s. Okay, so let's look at this. And this is what I love to do, folks. The history is just absolutely intense. When you go to it, you learn so much, especially when viewing the charts. Because, again, charts are emotional based, right? People are traders. They're trading stocks. They're trading commodities. And therefore, obviously, charts are going to represent emotion, fear, and greed, which is people are ruled by. So what you saw here is from basically 72 to 75, you had an up move. Well, does that look familiar? So 2018 to 2020. Up move. Then from 75 to basically 77, you had a consolidation period. Well, what does that look like? Does it look like what we've seen since 2020 and now we're in 2022? So again, 2+ years up, just like we had in 2018 to 2020. About 2 years of consolidation, which we're getting closer and closer to. And then look at the move, folks. Holy cow. Wow. All right, now, I'm not going to tell you guys that gold's going to go from $100 right here or so to $900 up here, right? I mean, I'm not saying that percentage gain is going to occur again. I think honestly, with Bitcoin and cryptos in existence, it probably won't. However, is it possible here was between 1977, we'll call it, and 1980 in a 3-year period, is it possible for gold to go to 5,000 an ounce? Hell yeah, it is. And I mean, look at that chart. Is that not the coolest thing? And again, think of inflation. Think of this was the time period. Everyone was all baffled over the last year, year and a half with gold saying, well, now we're starting to see inflation. Why isn't gold running? Why isn't it doing? Well, look at the history. So gold had a run, just like it did recently in 2018 to 2020. Then it has consolidation, which charts have to do, and then begins the mega run. All right. So, anyways, this is one of the reasons why I can't help but be bullish on gold. It's just so freaking cool. All right. Anyways, let's go quickly to silver here, and we'll type in silver. Bear with me as I get that up. There we go. So again, we'll flip back to the daily chart, and really there's not a whole lot to talk about here on silver to me. You're still kind of just chopping sideways in the chart. Bear with me while I get all the way up to the current period here. There we go. All right, so again, little gain on silver today. Nothing major to write home about. But again, the bullish pattern here, very, very clear. You're still holding this 2150-ish, 22 level on silver, which is good. As long as that holds, you're safe. Otherwise, you have a little downside to about 19 right here. Again, you ever getting down to 19, I'm a buyer, both hands at that point. No doubt about that. All right. Lastly, oil, folks. Let's look at WTI here. Okay. And here we have oil. And what did it do today? It fell. And again, if you've been watching my chart analysis, if you've been following my buy on SCO a couple days ago, excuse me, this is exactly what you expected. And the bottom line is the charts just tell you. Now, again, will we have the pullback that I think we're going to have? That's the bigger question, right? Because that hasn't happened. We're obviously pulling back off that high pivot. But like I showed you guys, if you keep on pulling back, look at how each pullback, because this gets wider. In theory, is it possible to go down here, somewhere 70-ish or high 60s? Yeah, I think it is. Absolutely. And by the way, think about it from the macro view too. So, this is the chart view, pure chart view here, which is obviously important. It's the most important thing to me. But then also think about it from a macro view. So, you have the Federal Reserve worried about inflation, so they want to bring down oil because that's a huge component of inflation. It goes through all the goods because, cars run on it, machinery, etc., all that stuff. And then you also have the midterm elections. And, if you go historically, whether it doesn't matter if it's a Republican or Democrat in the White House, going into midterm elections, in general, you see oil fall. Whether you want to say it's done on purpose or not, that's totally up in the air. But the point is, the consumer, the voter, is much happier when oil falls, right? And when they're paying less for their gas in their car. And obviously, right now, they're paying max price that we have seen in quite some time. So, those two factors on a macro view, plus the chart, plus what I talked about from 2018, how it lags the market but then plays catch up, has me obviously looking to hold my short on oil for a little while. You guys have a wonderful rest of your day. Let's keep rocking and rolling. Thanks for being members. Of course, I'll talk to you soon. Take care.